Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is June 2nd, 2025, and we're diving into the first quarter earnings report for fiscal year 2026 from Science Applications International Corporation, or SAIC. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. SAIC is a key player in the technology integration space, especially within defense, space, civilian, and intelligence markets. Their latest earnings report provides some interesting insights into their performance and strategic direction.
Revenue and profitability overview. Let's start with the top line. SAIC reported revenues of $1.88 billion for the first quarter, marking a 2% growth compared to the same period last year. John, what are the key drivers behind this growth?
The revenue increase is primarily due to the ramp-up in volume on existing and new contracts, which offset some of the impacts from contract completions. This growth, albeit modest, indicates that SAIC is effectively capitalizing on its contract portfolio.
And what about profitability? How did they fare in terms of net income and earnings per share?
SAIC reported a net income of $68 million, with an adjusted diluted earnings per share of $1.92, which is consistent with the previous year. This stability in EPS, despite a slight decline in net income, reflects their ability to manage costs and maintain profitability.
Operational efficiencies and future outlook. Moving on to operational efficiencies, SAIC's operating income was reported at $121 million. How does this compare to their adjusted EBITDA, and what does it tell us about their operational health?
The adjusted EBITDA came in at $157 million, which is about 8.4% of their revenues. This slight decrease from last year's 9% indicates some pressure on margins, likely due to timing and volume mix in their contract portfolio. However, their ability to maintain a strong EBITDA margin is a positive sign of operational efficiency.
SAIC has also reaffirmed their fiscal year 2026 guidance. What does this suggest about their confidence in future performance?
Reaffirming their guidance suggests that SAIC is confident in their strategic initiatives and market positioning. They expect revenues between $7.60 billion and $7.75 billion, with an adjusted EPS of $9.10 to $9.30, which aligns with their growth strategy and market opportunities.
Strategic initiatives and contract wins. John, let's talk about SAIC's strategic initiatives and recent contract wins. They reported net bookings of $2.4 billion with a book-to-bill ratio of 1.3. What does this indicate?
This strong book-to-bill ratio indicates that SAIC is securing more contracts than they are completing, which is a positive indicator of future revenue streams. Notably, they secured a $1.8 billion contract with the U.S. Army, which underscores their strong position in the defense sector.
And how does their backlog position them for future growth?
With a backlog of $22.3 billion, SAIC has a solid pipeline of future work. This backlog provides visibility into future revenues and supports their growth outlook, especially with significant contracts in defense and intelligence sectors.
Cash flow and capital deployment. Let's shift focus to cash flow and capital deployment. SAIC reported operating cash flow of $100 million. How are they deploying this capital?
SAIC deployed $152 million in capital this quarter, with $125 million allocated to share repurchases and $19 million in cash dividends. This indicates a strong commitment to returning value to shareholders while maintaining financial flexibility.
They also declared a quarterly dividend. What does this say about their financial health?
The dividend of 37 cents per share reflects SAIC's confidence in their cash flow generation and financial stability. It also signals their commitment to providing consistent returns to shareholders.
Key takeaways. As we wrap up, let's summarize SAIC's performance this quarter. Despite some challenges, they reported solid revenue growth and maintained a stable adjusted EPS. John, what are your final thoughts on SAIC's investment prospects?
SAIC's strong contract wins and robust backlog position them well for future growth. While they missed the EPS forecast, their strategic initiatives and reaffirmed guidance suggest a positive outlook. Investors should keep an eye on their execution in the coming quarters.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on SAIC's performance in the comments below.